Hey guys, I'm excited to bring you the latest updates in the cryptocurrency world. This week, we delve into Bitcoin's robust technical performance and long-term accumulation trends, Ethereum's potential boost from ETF approvals, significant regulatory shifts in the United States, and global crypto mining updates. Let's dive right in and explore these exciting developments and their impacts on the crypto market. Let's go market. Bitcoin has been trading within a range of $67,700 to $70,425 over the past week, showing some indecisiveness in breaking through its March all-time high of $73,737. From a technical perspective, Bitcoin's performance has been robust. The 5-day moving average stands at $68,369, while the 20-day moving average is at $66,962, reflecting a solid 8% increase. The Relative Strength Index, or RSI, for the 14-day period has increased to 49.05%, indicating strengthening buying interest and hinting at a possible continuation of the upward trend. The stable 24-hour trading volume, now at $113.38 million, underscores sustained market participation, which is crucial for supporting further price increases. Bitcoin appears poised for continued strength, with the potential to revisit recent highs and beyond, aiming towards $70,667 and $71,819 at its immediate resistance levels. From a fundamental perspective, Bitcoin exchange-traded funds, or ETFs, saw a remarkable net inflow of $374 million over the past week, indicating strong TradeFi demand. Additionally, long-term investors, or LTHs, are showing signs of reduced spending pressure. According to the latest Glassnode report, these investors are returning to accumulation patterns for the first time since December of 2023, adding around 12,000 Bitcoin per month to their holdings. The recent uptrend in Bitcoin appears to be spot-driven and strikingly similar to the 2015 to 2017 bull market, which occurred before Bitcoin's infancy, before derivatives were available. The launch and inflows into US spot ETFs support this view. Over the past week, Ethereum has been trading between $3,664 and $3,959. It's currently facing resistance at around $3,869 and $3,919 levels. Recent strength is evidenced by its relative closeness to its one-month high of $3,972, underscoring the market's potential to maintain and surpass these gains. From a fundamental perspective, the unexpected approval of spot ETH ETFs by the SEC may provide the catalyst necessary to stimulate Ether's strength by boosting interest and investment in the second largest crypto by market cap. Among the latest Ether ETF developments, BlackRock updated its S1 filing, taking a step closer to its launch. The updated filing reveals that the seed capital investor, an affiliate of BlackRock, purchased 400,000 shares at $25 each on May 21st, resulting in a $10 million investment. In the regulatory sphere, the tone shift in the Biden administration's statements on crypto has now materialized into action. President Joe Biden's re-election campaign has started engaging with crypto industry players for guidance on crypto community and policy. Sources indicate that following anti-crypto statements, including Biden's vow to veto the repeal of SAB 121, the campaign recently approached several crypto experts for insights, hinting at increased curiosity about cryptocurrencies. Reacting to Trump's recent support for cryptocurrency, including their announcement of taking crypto donations, the Biden campaign has adjusted its strategy. Both campaigns are now showing more openness to the crypto industry. Meanwhile, MasterCard has launched its crypto credential service, allowing users to send and receive crypto using straightforward aliases instead of complex blockchain addresses. This service is already active on several exchanges, facilitating smoother blockchain transactions across Latin America and Europe. This is a notable advancement for broader crypto usage, which might later include applications like NFTs or ticketing. The Russian crypto mining sector is projected to grow by 20 to 40% in 2024, driven by low electricity costs and minimal regulatory oversight. Despite the lack of legal status for mining in Russia, favorable climatic conditions and potential repurposing of production sites, particularly in Siberia, contribute to the positive growth dynamics. However, the sector remains largely unregulated, with ongoing discussions about potential legalization and regulation to address grid load and taxation. Currently, 2.7 gigawatts of electricity electricity are spent on mining in Russia, comparable to the consumption of a small country. Approximately 60% of the capacity is occupied by legitimate industrial mining, while 40% is taken up by gray and black mining, which involves violations. The launch of the first ever Bitcoin mining derivative product on a regulated US exchange marks another significant milestone. Luxor Technology Corporation and Bitnormal Inc. have introduced hash rate futures on Bitnormal's US-based derivatives exchange. This development offers investors a new tool to access a derivative directly tied to Bitcoin mining hash rate, pushing digital assets further into everyday financial systems. So that's all we have for this one. I've been your host Trevor with GoMining. Make sure to stay up to date by subscribing to the channel, also liking the video and commenting down below your thoughts. Anyways guys, we'll see you in the next one.